Hey everyone, this is Rocket Dollar. You've got Brendan Walsh and Chris here. I'll do intros in a second, but we're doing a just quick solo K webinar here. Going to go through a lot of questions that we always get from solo 401k customers, small business owners, people interested in a solo K, seeing if they qualify for it. We always get a huge rush at the end of the year here from people trying to sign up. And why does that big rush come? There's a hard deadline of December 31st at midnight that every solo 401k needs to be open by. So right at the start here, just want to make sure everyone's aware of that. And also, for Rocket Dollar's sake, these plans, we need some time to open them. We have a hard deadline of December 20th at midnight. So to ensure that your solo 401k plan gets opened by New Year's Eve, make sure that you're signing up by December at midnight. We get a lot of solo 401ks in. Joe Wan on our support team, he just needs the time to open those and make sure that we can serve all our customers here. All right, so I'm just introducing myself. You might have seen me on some webinars or heard me on the phone here. My name's Brendan Walsh. I came down here to Rocket Dollar 2 years ago, moved down here from Chicago to come to Austin to join Chris and Henry on the team here. And previously, I was a financial advisor, usually doing 401k plans. So this was not too many solo Ks, but usually for small business owners, 10 to 15 employees, a few solo K customers, few SEP IRA type of business owners, working with people on small retirement plans. So now at Rocket Dollar, I answer the phone. I do our sales here for both our IRAs and our solo 401k. And just generally, if any business owner, has some advanced questions, I'm happy to answer them. And I'm here with Chris Palmisano here today too. Chris, want to introduce yourself?
Hey everybody, it's Chris here. I have a background as an entrepreneur and an executive in larger organizations. But what makes this interesting for me is that I opened my very first solo 401k back in 2006. So I've been a long time active user of these products, and I'm really happy about the one that we built here at Rocket Dollar that we can offer all of you. And we'll keep on rolling. Go ahead, Brendan. Thanks.
Awesome. Yeah. The solo 401k was our first product here at Rocket Dollar. And so a lot of people ask, they've heard a lot about the solo 401k. They say, hey, why is this so popular? Why have I heard so much about it? And these are some main points that we're going to get into later on the webinar. First off, you can do both traditional and Roth contributions in the same solo 401k. People always ask, hey, I have to buy two plans. No, just one sign up. You get access to both of these contributions inside a solo 401k. There are very high contribution levels in a solo 401k. It's almost 9 times that of an IRA. You get up to about $56,000, $57,000 into a solo 401k. You can also do loans to yourself. Just like an employer, if you have a W-2 job, you had a 401k and you can take a solo 401k loan. You can take a loan from that employer plan. You can take a loan from your own solo 401k, use that in your own business, use it with your family, use it for whatever financial needs that you do have, and then pay it back to yourself. Not paying back to Fidelity, Charles Schwab, or paying interest to them, but paying interest back to your own plan. And for the tax nerds in the audience, for real estate investors, we will get into, there's a certain tax called UDFI. Can be a complex tax, can sometimes hit some real estate investors, can sometimes, frustrate some self-directed investors, people investing in alts. However, the solo 401k is totally exempt from this type of tax. And we'll get into what that means later on. So the solo 401k is also sometimes called the solo K for short. It has been called the EQRP, which is an enhanced retirement plan. So that's just kind of a marketing term that we see out there. Basically what that means, it's a solo 401k that can invest in alternative assets. All right. So I'll just go over our pricing here just very quickly. We'll go over it in depth later. But at Rocket Dollar, we've really tried to make this pricing a lot more simple, a lot more expected, a lot less nickel and diming. So we have a core price, our entry-level price, which some people think is more like a do-it-yourself account, for $360 and then $15 a month. And then our gold price is $600, then $30 a month. And the main difference of those accounts, we'll get into them later, but think of it as the gold account is just a higher level of service, a lot more hand-holding, extra goodies for you, while the core is kind of entry level, and the do-it-yourselfer can just get right in and get the bare bones essentials that they need. With both these accounts, you're still getting a fully functional solo 401k. So Chris, want to jump in here?
Yeah. So what does it mean to qualify for a solo 401k? Well, let's jump into it. So typically this means that you're self-employed or that you have some sort of business that you own, and that can be any type. So even if you're just a full-time worker someplace with a W-2 and you have a side business or a side hustle, which is very likely a sole proprietorship, you still qualify for a solo 401k. A lot of sole proprietorships will eventually grow into a limited liability company. So if you have an LLC where you are the owner, where you are the single member, I should say, you very likely qualify for a solo 401k. Also, if you have an S Corp, whether that's a limited liability company and you've elected S Corp taxation, or some other structure or some other entity type and you've elected S Corp taxation, or a C Corp, you would very likely qualify for a solo 401k as long as you don't have any other employees besides your spouse. With an S Corp or a C Corp, you're going to be on payroll. And so with payroll, then you would submit your contributions to your solo 401k out of your payroll. And then remember, with an S Corp, you should have a reasonable salary for the market that you're in and for the business that you're in. But yes, you would qualify for a solo 401k. And then there are some situations where even in a limited partnership, you might qualify for a solo 401k, but Rocket Dollar at this time does not offer a solo 401k for limited partners. What you have to have, and this question comes up a lot, is active income or employment income, so self-employed income. So investment income, like if you're just investing passively into properties or syndications or other types of assets and generating investment income, your investment income does not qualify for contributions to a solo 401k. Rental income does not qualify as self-employed income for a solo 401k. Now, if you have a management company where you're actively managing rental properties and taking a salary, that would qualify you for, or potentially qualify you for a solo 401k. So these things are just helpful to know when you can qualify for a solo 401k and when you cannot. In this question here, can you have a corporate or a W-2 401k, or rather a W-2 401k plan and your own solo 401k? Yes, as long as your self-employed income is coming in and is not coming from, say, investment income. So if you have self-employed income, the kind that would go on Schedule C, then you very likely qualify for a solo 401k. So just make sure that your pre-tax or Roth contributions do not go over the legal limit, which this year is $19,500. So you can have more than one 401k plan, but you're still limited by those employee contribution limits.
Okay, great. Thanks, Chris.
You got it.
And yeah, so a lot of people ask, they love the idea of the solo 401k, but they just hit a barrier, something that Chris talked about.
Yeah.
They don't qualify. So many times I'm talking on the phone, they love this idea, and I say, hey, does your spouse qualify? Does her husband or wife own a business? And oftentimes people will, oh wow, my spouse does own a business. That I just didn't even think about that. And Chris was just talking about, if you have rental income, but you don't have any type of salary, a lot of times people have passive income. They just need to turn it into active self-employment income. Put it in the right IRS box. It's something you can talk to your CPA about. So you can just basically be a management of your own rental company. There are ways to turn your income you might already have into active income to get into the solo 401k plan and then to justify that to the IRS. All right, so and we're going to go through a lot of great things in the solo 401k here, but sometimes people say, hey, I'm juggling the thoughts between an IRA and a solo 401k, or I'm trying to self-direct something for the first time. Is the solo 401k right for me? So we're going to talk about all the great things of this product, but these are sometimes to be saying, hey, this is maybe not right for me. Maybe you should stay away and just stick with an IRA for the time being. So are you trying to save over $6,000 per year in tax advantage retirement dollars? If you're just doing a small contribution, sometimes it's just much simpler to go to an IRA. Do you have consistent self-employment income each year to meet your contribution goals? So again, an IRA, you can stuff any income into an IRA. When it comes to the solo 401k, if your business is a little up and down, maybe it goes up some years, goes down and has a zero some years, you might not be able to meet your goals in the contributions, or you might not technically qualify each year. You have no self-employment income. Are you trying to take out loans from your retirement account? If you're really targeting a loan, the solo K can be great for you. Are you trying to save both traditional and Roth dollars, or do some conversions in there? The solo 401k can be good for you. If you just really want to stick to one, a small contribution, either traditional or Roth, again, the IRA is sometimes much simpler to get that done. With your business, are you going to be doing any matching or profit sharing contributions? If you're just doing $8,000 a year, but you're doing no profit sharing or matching, yes, that's a little bit more than an IRA, but you might be going through some complexity there. This takes some time to calculate the contributions to get those into the solo 401k. Maybe you need to go visit your CPA for something that Rocket Dollar can't answer for you. So if you're not going to do any profit sharing or matching, and you're only contributing somewhere between $5,000 to $8,000, the solo 401k can be a bit more complex, just a little bit more of a learning curve. Saying, hey, maybe I just want something simple, something very easy to operate each year, like an IRA. And that will keep things simple in your head. However, a lot of great benefits that we're going to get into here. All right, so what can you invest in with a solo 401k? What's really amazing about the Rocket Dollar Solo 401k is you can invest in stocks and bonds or any alternative asset allowed by the IRS. This is a huge, there's a huge amount of opportunity here. There's only a very small amount of investments that are disallowed. So much flexibility. However, a lot of people come to us just like stocks and bonds for a solo 401k because they love the flexibility of it. Not a lot of solo 401k plans can do Roth out there in the marketplace. Roth has been around for a very long time. However, many solo 401ks don't offer it. So a lot of people come to us for stocks and bonds. However, we do not have a dedicated stocks and bonds broker at this time. So you're not trading directly through Rocket Dollar. Rocket Dollar is creating the plan structure for you. Then you go out and grab your own investments. A lot of our customers prefer TD Ameritrade. They generally understand these types of special accounts, like a trust trading account. So you're not going to TD Ameritrade and asking for their solo 401k. You have a Rocket Dollar solo 401k already. It's already administered, set up for you. What you're going to TD Ameritrade for is just a trust trading account. And if you go to a different type of platform, maybe a real estate platform, maybe precious metals, you register your solo 401k as a trust. If they don't know what it is, and you're able to send money to that investment and be able to get investment returns inside of a retirement account. We'll all get into how this works in a little bit. And so, Chris, this is something I love to talk about with customers. Retirement plans. A lot of people don't know they've had the ability to invest in alternatives since 1974, since ERISA law was created. Chris, we've seen the infrastructure though does not match up.
Yeah, that's correct. What ended up happening, I mean, if you think about it, is that Wall Street grew up around the same time, and the Wall Street business model is to underwrite stocks, bonds, and securities on one side through investment banking, and then through private wealth and investment management to sell those assets on the other side. And we don't have an anti-Wall Street message by any means, although some solo 401k or IRA providers do. We actually believe in diversification, so we want you to invest in everything as long as it meets your goals and fits your portfolio plans and your desires. So yeah, as that infrastructure took off for publicly traded stocks, bonds, assets, mutual funds, the alternative infrastructure or the systems and process for alternative assets somewhat suffered. And this was left to the devices of just the narrow or a narrow audience, typically high net worth individuals and families and investors. And so now that infrastructure is starting to catch up, and it's becoming easier to do these things, which is good and bodes well for all investors.
Awesome. Yeah, thank you, Chris. And
You got
something
it.
at Rocket Dollars, why did Henry get together with the co-founders of this company? It's just, hey, this infrastructure is lagging, some of this tech is lagging. Let's bring some things into the, up to current speed. Let's get the technology up there. Let's get the fees a bit more modernized. There's a lot more demand for alternatives now in the last 15, 20 years. So let's bring up the services that people expect just the same from their stocks and bonds brokers out there. All right. So Chris, you want to go through some of the investments? These are all really popular investments with some of our customers.
Yeah. And so when we say alternative assets, what does that actually mean? Well, some of the more common ones that we see specifically with our customer base is that they like to invest in real estate. And so actually beyond the high school diploma, the real estate license is one of the most commonly held credentials in America. So there's millions of people out there with expertise in real estate, but it's never really been easy for them to invest with real estate or invest in real estate with their retirement account. So it's one of the things that you can do with Rocket Dollar. And that means you can go out and buy a rental property. You can even take out a mortgage on those rental properties, which we'll get into a little bit later, or invest in a real estate syndication. So you may know a real estate professional that has a fund or that is syndicating investments into things like multifamily or even single family. Private equity. Private equity can take a lot of forms, but you could become a limited partner with your retirement account if you have enough money in it. Hedge funds. We do see people that want to invest in hedge funds and get that high risk exposure in their retirement account and not have to worry about paying taxes on it. Loans, debt, promissory notes. Those are all things you can do with a self-directed or checkbook style 401k. Venture capital, startups, and crowdfunding. Startups and crowdfunding is becoming much, much more popular of an investment class, not just for individuals, but also now with retirement accounts. This is actually how a lot of the team members at Rocket Dollar invest some of their alternative money in their retirement accounts. Cryptocurrencies are now super popular. We have lots of clients who come to us and will take a small portion of their retirement account and invest in cryptocurrency like Bitcoin or some other blockchain-based cryptocurrency. We also see precious metals, farm assets. So you can invest in agricultural investment opportunities or farmland. And then even the occasional international investment. So there's only a few things that you cannot invest in, which we're also going to get to in a little bit. But the primary ones are real estate and startups or private companies. Those are very common investments with our investor base.
Yeah, and a common theme that we see, there's so much investment mantra out there says invest in what you know, and they really drill that into you. And we have customers sometimes, yes, they have a financial advisor that helps them with stocks and bonds, but maybe they're not the biggest expert in that. However, when it comes to something like real estate or something that they're close to, they feel much more of a strong connection. Maybe they've got a network in that space that they can really take advantage of some awesome opportunities. So let's take those opportunities that people are already doing in taxable accounts, allow them to build a really confident retirement account in that, something that they know and they feel comfortable investing in their future. Okay. So here is our solo 401k. Again, the structure of it. And what we have the big ring around here is just a lot of different real estate investments that you can possibly invest in. And this is just trying to show you, to just the $15 a month, the 360 and $15 a month, how many different types of investments you can access. So right at the beginning, we have a IRS pre-approved plan document that we set up for all of our customers. It's a legal document that basically sets up the structure of a solo 401k and ties that to your business or sole proprietorship. What that does is establishes a retirement trust. So this might not be like any trust that you've ever used before, but when you think of Verizon, that has thousands and thousands and thousands of employees with a 401k attached to it, they have a trust and all of the employees' dollars drop into that trust. This is a tiny retirement trust just for you or maybe a spouse. With the solo 401k. So what we're giving you is a tiny little retirement plan. And where does the money actually go? How do you actually get it to these alternative investments? We have a bank account. The average, really simple customer might just open a pre-tax or traditional bank account. Most customers open two, for a traditional pre-tax bank account and then a Roth bank account. And just know that this is not a Roth IRA. This is an actual bucket for Roth dollars inside your solo 401k. More complex customers, the ones that really like to go wild, they'll open after tax. They might use multiple bank accounts to do conversions and stuff like that. And this is all available with our core account or with our gold account. There's obviously just more hand-holding and more structure to help you out in our gold pricing there. So again, the plan document establishes a retirement trust, and then you have trust bank accounts. So you as the trustee can send money out to this whole different variety of investments with no per investment fee. So if you have our customers that have 4 investments, still pay $15 a month compared to the investor that has 100 different investments in their solo 401k account. So some quick things that might be a bit different or people have questions about. Our solo 401k does not have an LLC. Some solo 401ks do have LLCs. Our solo 401k can invest in an LLC. Maybe, one of these real estate investments has a LLC to hold the real estate investment. However, it's not necessary, to have an LLC inside of a solo 401k. There also is no custodian. So Chris, do you just want to get in, the self-trustee bit
Sure.
of the 401k?
Yeah, so this can sometimes be confusing. So with this solo 401k, you individually, with your plan, you will act as the trustee over your own plan. So every trust, or in this case, retirement trust, has a trustee. With the Rocket Dollar solo 401k, you become the trustee over your plan. There is no traditional custodian in the sense of a bank or a financial institution acting as a custodian. Now, there's a bank here that's going to hold the bank account for you, but that bank is not actually your custodian in a traditional custody sense. So you are the trustee over your plan. We call these non-custodian self-trustee plans. So those are technical terms, but just know that you act as the trustee over this plan. There is a bank account that holds the cash for you and holds the assets or the cash asset. And then you can send that cash out to go and make your investments. And then when those investments hopefully throw off more cash later on, it comes right back into the same bank account.
Yeah, and then something that I talk about a lot with the customers, if you talk to a lawyer or a retirement plan lawyer, someone asks, who owns my real estate property? Who owns my cryptocurrency? It's always this question, when you're putting your money somewhere, you want to have confidence in it. So with your cash, that's an FDIC insured bank account. You're the trustee of those bank accounts. And with any actual asset, that asset is owned by the solo 401k. So you do not personally own the asset. Rocket Dollar does not own the asset. Your solo 401k owns this asset. And this has been a strategy, by like the Mitt Romney people style of the world. People, maybe at a real estate firm set up a retirement plan that can go out and try and grab some complex assets. This is trying to use a structure for your retirement plan to own assets. It's been traditionally been really hard to do, or, pay a ton for plan administration. It's a really simple, light way to go out and have your solo 401k, your retirement plan, own these assets. So just some procedural stuff with the bank account. Someone says, all right, I've got this bank account. How do I actually get money to my investment? You can do an ACH, a standard electronic funds transfer for up to $100,000 for free. You can do a wire fee. That's $25 from our partner bank. Something we've worked really hard on to eliminate all these other transaction fees, all these other things. The wire fee is still going to be there at almost every banking institution in the United States. Then a check, you can get a checkbook with your account. Some people ask, there's this term checkbook control. If I don't have a physical checkbook in my hand, I don't have checkbook control. And it's a lot of confusing terminology there, but what people are talking about when they talk about checkbook control is the ability to send money to any investment. So you don't have to call up Rocket Dollar and you have a real estate property that is closing. You only have about a couple weeks left before that's going to close. There's some competition with other investors. You can walk over there and write a check from your account without calling Rocket Dollar. You are able to go into an investment. It needs to be allowed by the IRS. But the great thing about the checkbook control accounts is that you don't have to constantly check with the custodian for every transfer. And you don't actually need the physical checkbook to have checkbook control. You can send an ACH, you can send a wire. A lot of customers without real estate, they find that totally fine to send stuff to a hedge fund or a venture capital fund. And then we have a debit card. Some people ask, like, what is the debit card actually for? Some really great, easy examples is, you buy a single family home property and your solo 401k owns that property. You have renters, and now those renters are paying back money into your bank account. However, the toilet breaks, some plumbing breaks and overnight, a contractor is doing an emergency run in the morning to Home Depot for you. You can hand your debit card to this contractor as they go to Home Depot. That contractor can swipe the card at Home Depot to buy a new toilet, maybe some piping and some tile. That will come straight from your solo 401k. Some of our cryptocurrency customers use this to, buy a service or buy a hardware wallet or something like that, something to buy a service with their solo 401k. All right. All right, Chris, want to jump in here?
Yeah, so another common question. So can I have a solo 401k if my business has employees? Well, if you think about the name solo 401k, in general, it implies that the business is just you. And so the law does allow for you to enroll your spouse also in the solo 401k plan, as long as the spouse is also part of the business. So if you're running an S Corp or C Corp, the only W-2 employees can be you and your spouse. So if there's any other employees in the mix, you would be disqualified from the solo 401k, and you would have to offer a group 401k and allow those employees to participate in the group 401k plan. If you're self-employed, but you're self-employed and your business is a sole proprietorship and you're getting 1099s, those 1099s are fine to have. Or if you are contracting with people for your business and they're working with you, but they're collecting a 1099 and they're not on W-2, and then in that case, you are also, in most cases, qualified for the solo 401k plan. However, you do need to make sure that those contractors meet the requirements by the law to be contractors, and that they shouldn't be W-2 employees and you're just putting them on a 1099. That's not appropriate, and you want to make sure you're doing the right thing. And so if you have questions about these things, the thing to do is to sit down and talk with either an employment attorney from your state or an ERISA attorney. An ERISA attorney is a retirement attorney, also probably in your state. So someone nearby that has a good sense of the local market. Mm-hmm. There are other options that we can talk about, but in general, if you have any full-time employees besides you or your spouse, you are not eligible for the solo 401k. You've got to create a group plan.
Yeah. And something that people ask a lot is, hey, is there a minimum income level I need for a solo 401k? There is not. That is not in the IRS code that you need a minimum income level. However, this is something, if you're giving yourself a $2 salary, you should really be talking to your CPA. You should have something reasonable for you and your spouse's responsibilities at the company. This is something that you need to talk about. Make sure that whatever you're contributing to the solo 401k, you need to make sure you're paying yourself an adequate salary for that, and that your salary matches up with what, the income that you're actually running for the solo.
Yeah, you could also check with a tax attorney in your area. Like, there are payroll matrices, so you can get a good sense of how much a reasonable salary is. And then out of that reasonable salary, you can, of course, defer or make an employee salary deferral so that you can start putting money into your solo 401k and saving for your retirement.
Yeah. And this is, people ask, like, what's Rocket Dollar's role? So, we help you set up the plan. We help you operate the plan, get rollovers in, get transfers in, make sure you get into your investments. Two things we are not actually. We're not a CPA. So we can help answer structure the solo 401k, but we can't help answer something like, what should I pay myself? If I'm paying myself $10,000 a year, how much should I contribute or profit share? That's something you should go to a CPA for. And we're also not a financial advisor. So we can help you get into your investment. We like to do a lot of education in the alt space, but when it comes to what should I actually invest in, is this a good risk level for me? We have to step back and say, hey, that might be something that's best to see a financial advisor for. Okay. And Chris, you want to talk about multiple businesses and some?
Yeah, sure. Yeah. So this is another question that comes up pretty often. Entrepreneurs and business owners sometimes have multiple businesses or more than one business under their umbrella. So the way to think about this is, if any of your businesses are related to each other and any of those businesses have employees, then you very likely do not qualify for a solo 401k plan. It is best to check with a CPA or a tax attorney or a qualified professional in this area. So just know that if there are other companies in the family or in the businesses that you own, you very well may not be qualified for the solo 401k. An example that's popped up that we have seen is that a couple who was investing very heavily in real estate and running a real estate business had a separate company that they owned that was a management company. And that management company engaged in all the property management for all of the properties in their various other real estate businesses. And what the government ended up saying in a court case was that that management company was part of a control group. So they're part of one big family of companies owned by the same husband and wife, and that they were not, in fact, qualified for their solo 401k, and there were penalties involved and all kinds of paperwork. So that's something that you want to try to avoid. And the way you do that is you just make sure you engage with a qualified professional up front. So talk to a lawyer, talk to a CPA, talk to a qualified professional that can give you some guidance. This is not worth pushing. So do not push it in this area. Just make sure we're doing the right thing.
Yeah, and just some quick from experience of me being in the small plan market with business owners, a solo 401k is a lot different than a plan of an employer plan of 15 employees. And if you push this and you end up putting yourself in a spot where you do owe, dollars to all those 15 employees, you're going to have to go to Fidelity. You're going to have to go to ADP, Vanguard, Census. You're going to have to get a plan set up. You might have to do back pay. You might have to be sitting with TPAs for years getting this set up. So this is something, people ask on the phone about, oh, these are not that closely related. If the IRS sees them as related, you're going to be in for a world of hurt. Don't push this. Don't even ask, honestly. It's just going to be a super expensive mistake if you really don't qualify for solo 401k. You try to open one because you could be hiding a retirement benefit from your employees. Okay. So high contribution levels. This is something that's a great advantage of the solo 401k. It's almost 9.5 times that of an IRA. For 2020, the $19,500 you can put in a traditional or Roth deferral. Now, this is your employee contribution. Now, some business owners start thinking, what employees? I don't have any employees. You are the employee. If you are a W-2 of your own company, you have some type of salary and a sole proprietorship, you are the employee. So kind of think of it a little bit separately. You've got yourself and your business. Just like someone does a personal contribution at a company like Verizon or Google, have a big 401k plan, and then they get a match or a profit share. Google and Verizon are putting that money into the 401k. So you think of yourself and the employee with the $19,500. Now, when the 37,000, this is the 37,500. This keeps going up each year as contribution limits update. So this is something, if you're watching this much later, make sure you check the current contribution levels for every year that you're in. So a profit share or employer match contribution comes in from your business. So this is solely from your business. And you have to have, just like a W-2 employee at many other places, you have to have a high enough salary to justify a profit share or a match. So some people say, oh, I don't like paying myself a salary. There's payroll tax or whatever. This is why you pay yourself a salary, go through that little bit of pain on the payroll taxes, FICA, etc. You are able to do a personal contribution, which enables you this much, much bigger bucket of a profit share or matching contribution in the solo 401k. And this is where a lot of this great flexibility, you hear people about dumping tons of money in through a solo 401k. This is how they're doing it. They might be doing a profit sharing match from the company, getting those extra tax advantage dollars in there. If you are over 50 years old, you can get some extra catch-up contributions as well. These have increased in 2020. So it's $6,500. So, getting over $63,000 in your solo 401k each year, this is a way, if you've been behind on saving, this can be a way to really pump up your retirement account. And something that a lot of people ask about or might get confused about, when we're talking about the personal contributions or employee contributions, that is very easy to do, traditional or Roth. You can pick whatever you want. For the 37,000, it's usually a traditional or pre-tax. There are some extra strategies to get more money into this Roth, but it can be complex. There can be extra steps that you have to go through. So basically think about it. The 19,500, very easy to pick traditional or Roth without much thought. You just get to throw that in there. With the 37,000, the company contribution, you're going to have to go through some extra financial planning if you want to get some Roth money in there.
Yeah, and I'll add a couple things here. Just helpful to remember that if you're running an S Corp or a C Corp, your employee salary deferrals will come out of your payroll, and your profit sharing or your employer contribution will actually come directly out of the corporate or the company bank account and go into the 401k plan directly. And so if you do that this year, it would go on this year's tax return for the corporation. The company will file its own, in the case of an S Corp, 1120S, it's the company's tax return, which is due in March of next year. So that's when you would record that employer contribution. It would go on this year's tax return. And then if you're self-employed in the form of a sole proprietorship, then you can just take this, you can take that employer contribution at any time as long as you have enough self-employed income.
All right. So again, a secret weapon of the solo 401k. In the early 2000s, the IRS started allowing Roth contributions in 401ks. This is a thing in 2020. Many people still do not know. HR and CEOs of companies all over don't even know that they can have a Roth account in their employer plan. So this is something, spread the awareness there, shout it out from the rooftops, make sure HR knows, make sure, friends that run companies know this kind of stuff, because employees, once they realize they can do this, have a great benefit. So for the solo 401k though, you can do traditional and Roth contributions in the same solo 401k. Again, you don't have to buy two solo 401ks from us. A lot of people say, hey, I'm just looking for a Roth solo 401k. Everyone who wants to do traditional and Roth, they buy the same account from us. The only thing that's different about our customers is they'll open separate bank accounts for the traditional and Roth dollars. A lot of people say, well, why do I have these bank accounts? That's because you cannot commingle those dollars between pre-tax and post-tax Roth. You have to be really strong in the accounting. If you're going to go through that through many years, this is something that you need to make sure you keep track of these dollars. If you ever enter an investment with a mix of these dollars, these need to come back in the same proportion that you went into an investment with it. And what is so great about having the pre-tax traditional and the Roth? This allows you to tax plan for the future. It's often very good to just have the option of both traditional and Roth. Roth is very popular right now. Tax rates have been historically very low. Ever since World War II, we've been at pretty low tax rates. National debt has been pretty high. So a lot of people try and guess, where are tax rates going? Whoever's in the White House, whoever's in Congress, if national debt is rising, there could be some upward pressure on tax rates, but we don't know. There could be a lot of political buy-in to lower tax rates. So what this does, it allows you to have a bit of pay taxes later in retirement with the pre-tax or the traditional, deferring those. If taxes are really brutal for you right now, you can defer a ton of dollars as a business owner to not pay those taxes in this year to when you're in retirement, and hopefully your expenses are lower. If your taxes are not that bad right now, you can visit an advisor and see, or CPA, and see if this is right for you. You can shovel a lot more into Roth if you feel fine in your tax bill at the moment. Pay those taxes now, get them over with, and have really tax advantaged dollars that are tax-free, or investments that are tax-free through the near future and in retirement. So a really this big secret that really should not be in a solo 401k and an employer 401k, there are not income limits for a Roth account. If you are barred from a Roth IRA, you can probably go into the Roth bucket of a solo 401k. With those bank accounts there, our customers can actually do conversions. between the traditional and the Roth account. And, we have these mega Roth customers come in sometimes. Chris, do you want to comment on that quickly?
Yes. So there is a technique called the mega Roth, or the mega backdoor Roth, I should call it, which is a way of using an after-tax account to get more dollars, Roth dollars, into your 401k plan. So you can see on the slide here, we've actually got two accounts. So two buckets. So your Roth bucket and your pre-tax bucket. Well, there's actually a third bucket, and it's called after-tax, which is very much like you opening a brokerage account in your own name, but you can have the same tax qualification, so the same after-tax type of account inside your 401k plan. And so that limit that Brendan showed you of $57,000, you could fill that up in the after-tax bucket and then convert it to a Roth. Now, this is a very advanced technique. It's typically used for just a small number of investors who have enough income and aren't looking to use the pre-tax bucket. So Rocket Dollar's plan is capable. Again, it's a very advanced technique. So just know that it's out there. And if you're one of the small number of investors for which that makes sense, we can support that.
Great. Thank you, Chris. Loans to yourself. This is a really popular move for the solo 401k. Again, one of the biggest things that we talked about. A lot of people, if they've had a W-2 job, they might have taken a loan from Fidelity, ADP, at a certain time in their life. Maybe it was just a little tough financially. Maybe you have something that you're trying to do. Maybe you're a business owner. You have a solo 401k. You're trying to pay some expenses, expand. This is something that you can take out these dollars, and there's no restrictions of where this money can go. We'll get into in a little bit. There are some restrictions. There's plenty about restrictions about investing in your own business. However, if you take a loan out, just like I mentioned, from your own solo 401k, you can do anything you want with that money as long as you pay that money back quarterly. You can do whatever you want with it. So, typically people ask, hey, what's the type of interest rate on this? Is Rocket Dollar the lender? No, your solo 401k is the lender of these dollars. You usually set a rate at prime plus 1%. So Joe Wan and our support team, he'll help you go through that when you're signing a form to take out a loan. So a lot of people ask what the loan process is. You create a solo 401k. Joe Wan and his support team, they'll help you roll over dollars over to your solo 401k. And then it's just a document. We have a document just to have a record of a loan showing you, basically you understand what the loan is and you've set the type of repayment schedule for yourself. So you have to pay yourself quarterly and you have 5 years to pay yourself back. This helps you. Joe will just help you a little bit through that process, make sure you understand that basics. This is something when you take out the loan, you obviously need to plan ahead a couple of years in advance how you're going to pay back that money. And so, that prime rate, the federal government basically releases some guidance every quarter showing where that's moving, what you should be having at your solo 401k. You can't give yourself a rock bottom interest rate or a sky high one. They want you to be within a certain limit that you're paying yourself back. So you take the proper advantage of the solo 401k loan. So a lot of people love this loan. How much can I take out? The standard loan, we've been in a bit of weird time here, which I'll get into, is that you can take out $50,000 or half your account balance. So if you have a ton of money in your solo 401k, typically just $50,000. If you have, less than 100, it's half your account balance. So if someone has $60,000, they can only take $30,000 out. If someone has $110,000 in typical normal times, they can only take $50,000 out. There's a lot of, decent complexities that you could talk to a CPA about taking a loan out or strategies, that we won't get into here. But this is such a powerful tool, financial planning tool for people to use and make use of it. And it's your decision when you take out a loan. There's no one, it's your solo 401k. So no one at Rocket Dollar is saying, is this the right time? You get to take control of that. This is a CPA or advisor, see what's right for you. That's your dollars. You get to do what you want with them. All right. So it is 2020. We are in the middle of the COVID pandemic here. So we'll see what happens in the very near future about this. But for most of the summer, the CARES Act, or the COVID relief bill, enhanced these retirement loans. It made them go from just a limit of $50,000 to $100,000. And they also eliminated the half limit. So someone with, $60,000 can take out 60. Someone with 110 can take out $100,000. Someone with $99,000 can take out $99,000. This did expire as of September 22nd in 2020. If you are watching this in the near future, maybe in late December or in January, February of 2021, there could have been another bill passed to extend some of these CARES Act retirement principles. So we could see these enhanced loans back if there's another COVID relief bill. However, we've had some congressional gridlock. We have a split Congress right now. We'll see how Georgia turns out. There's a lot of infighting over, what the stimulus bill should be. So as that continues to go on, we're not seeing an update to these enhanced loans for the solo 401k. Okay. So Chris, want to we can go over some.
Yeah, so let's talk about prohibited transactions. So there are some rules about what you cannot do with a solo 401k and in terms of what investments you cannot make. So the good news is there's only a handful of things you cannot invest in with your solo K. So the first one is collectibles. So anything like Beanie Babies or collectible cars or sports cards, you cannot buy and own or hold those with your solo 401k. There's also companies now that are helping fractionalize ownership of collectibles. But at the end of the day, if what you're investing in is, if the underlying asset or security is a collectible, you cannot use your solo 401k for that.
Lots of artwork stuff out there now.
Artwork, yes, thank you. Artwork and wine are now getting popular.
Rugs, things you put up in your home, beautiful things,
that's right.
Shiny things you like to show off to your friends.
That's jewelry. Anything collectible is disallowed. And then S corporation stock. So if you think about the way an S corp works, for those of you that have an S corp, you understand why this is probably not allowed. And then the last one is there are certain types of life insurance that are not allowed in a solo 401k. I advise you stay away from all life insurance, but if that's something that you are interested in, I recommend having a conversation with a retirement attorney who's familiar with the process. And then the big one here is self-dealing. So you cannot use your retirement account to invest in companies or assets that are held or owned by family members. You cannot invest in your own business with your solo 401k. You cannot invest in a business that is owned by or primarily administered or led by your parents or your children, so your grandchildren. There's lots of rules about who you can and cannot invest with. And what you also want to avoid trying to commingle your personal dollars with your retirement dollars. There are techniques to make this work, but again, do not do that. Do not venture into this without a lawyer, without someone that can advise you on the proper way to do it. And then the key one here, do not try to invest in your own business. There is a technique where a 401k plan can be used to invest in a business that you own called a ROBS, or a rollover as a business startup. Rocket Dollar does not offer a ROBS. We have people that we can refer you to. So if you're looking at doing one of those, you're best to find a firm that specializes in that. But if you end up on the phone with us anyway, we will refer you out to somebody else. We do not offer a ROBS. So just know up front, if you know what that is, we do not offer one.
Yeah, and there's a really common question we get all the time. Oh my God, I love the idea of a self-directed solo 401k. I just bought insert investment X and I want to get it into a solo 401k. They want it with taxable dollars they want to get into. Happens with crypto, happens with a real estate property someone bought 2 to 3 months ago, a startup share. They started, they got to know a company and they got a great deal on shares. You always have to know it has to be a new, fresh asset. You can maybe buy a similar asset if that's an allowed investment for you, but you cannot go and take your real estate property that you just bought personal dollars and suddenly put it into a solo 401k. You cannot have cryptocurrency that you bought personally, put it into a solo 401k. All these things were bought with taxable dollars. And some people think, but this is buying from yourself. This is your personal situation. Selling an asset straight to your solo 401k, classic self-dealing mistake, classic red giant flashing light. This can put a huge penalty on your solo 401k, and then you're going to miss out on all those tax benefits anyway. Plus, you could have a huge IRS headache on your hands. not
Well, and a
something.
penalty. Yeah. So
Yeah.
definitely that's a classic prohibited transaction example. So you cannot self-deal. You cannot sell yourself assets from your personal that are titled to you personally into a retirement account.
Mhm. Okay. And so a lot of people, ask, hey, I'm used to IRAs. What are some of the tax, how do I report my taxes with a solo 401k? How do taxes work in a solo 401k? And there's what the IRS does is basically say, there is a form called the Form 5500 that all retirement plans have to complete. So HR, business owners, you might have heard if you know someone in HR or a business owner, oh, I have to do my Form 5500. It was a pain in the butt or something like that. For the solo 401k, if you are under $250,000 in assets, you do not need to do a Form 5500. The IRS will know, that your plan has been created for your business, but you do not need to give this extra tax form reported every year. Some of our customers do. Some of our customers like to report it, but you do not have to. However, you obviously need to keep a good track of your investment records, contributions, and distributions. You can do that with your investment tracker. And Chris, I know that that's something you and your wife are always doing. You're keeping track of everything, just so you have good records. And it's not like someone under $250,000 in audit has no tax responsibilities. They do. They just don't have these extra reporting requirements for the
That's right.
500.
Yeah, they don't have to report if they're under 250 in assets. But we do recommend that they still use the Rocket Dollar investment tracker. So the investment tracker is your place to put in all the investments. You can log your cost basis, and then as you're doing your fair market valuation at the end of the year, you can store that new fair market valuation in the investment tracker. And so keep track of your retirement account. And once that number is over 250,000, you may decide to upgrade to a gold plan, and then we'll file the form for you. You can go ahead and talk about the rest.
Yeah, and something with the last thing on the investment tracker is it's a nice tool to help you out. You can also upload if you have an investment doc that you did with your solo 401k, you can upload that to the Rocket Dollar dashboard. You can just keep dumping stuff into there, so it's all in one place. Then you have the investment tracker to help track your investments. And the reason that we have that is, just a lot of alternative investments, they don't have as many tracking, just like the New York Stock Exchange. So just that little bit of help to put something into the investment tracker helps you, kind of look at a statement, so to speak, of your retirement account, because there's not nearly as much reporting as the New York Stock Exchange out there for some of these assets. Again, as Chris mentioned, once you get over $250,000 in assets, you can upgrade to the gold account if you want. Just go from 15 to 30 bucks a month if you are done with all your fulfillment of your account. We will complete the Form 5500 for our customers. So this is something, the Form 5500, we use the EZ form because it's electronically filed. This is something your CPA can handle. Some are totally fine handling it. I've had many customers just their CPA says, I don't want to deal with this. I don't know this form with as much confidence as I do all of your personal taxes. Just have Rocket Dollar do it. So some CPAs will send people right back to us and say, have Rocket Dollar do it. This is something you can complete it yourself. But obviously, if you are a do-it-yourselfer, it's not the worst tax form in the world, but it is probably something that you haven't ever done before. So just make sure you have that confidence. Make sure you're getting that form filed. If you do not file that form, you should be talking to Rocket Dollar in December, in January, because our support team goes through and makes sure those are filed. We start early in the year and try and get this all done. This is not something that we can help at the 11th hour, right before April 15th. And so some people ask, what about my investments? Do my investments have taxes? Chris, do you want to kind of talk about, how the investment issuer might deal with that? A lot of people,
Sure.
With a new investment that has never been in a retirement account, it's just hard conceptually for them to understand what's going on there.
Sure. Yeah. Well, so again, if the investment's made out of a retirement account, then your gains should be sheltered from taxes, depending on whether it's a pre-tax account or a Roth account. However, we also get a question about, well, what statements am I going to get from Rocket Dollar? So the way this process works is you open the retirement plan with Rocket Dollar. We get you into a bank account that's owned by your retirement account, and you can then send money out via ACH check or wire to make alternative investments. So the investment issuer or the investment sponsor from the investment that you're that you're buying or that you're making will actually handle your statements and should be sending you statements regularly. So you won't get any additional statement from us on a monthly basis about your assets. This is also why we give you the investment tracker. So you might make investments, and as you recall the slide that Brendan showed you, from several different investment issuers or investment sponsors. You may go out and get a retirement property, you may participate in a fund, you might open an account on Gemini or Coinbase, and you might also open an account at TD Ameritrade. So you can actually store all of that information manually on the investment tracker and keep track of your investments that way.
Great. And yeah, and so we just we have some deadlines. Unfortunately, this kind of puts the pressure. This is why people call so much for the solo 401k. We talked about this right at the opening of our webinar because so many people forget about it. We get people calling in January. You have to open your solo 401k by December 31st. That does not mean just paying on rocketdollar.com. You have to go through our support team. You have to sign a document to adopt a plan document for your business. Because if this solo 401k is not officially opened legally, you can't do contributions for 2020. So we just have a deadline saying, hey, we need to work through customers, get them their documents, get them to sign the plan document, make sure all the business information is correct, make sure the bank's going to open their account, identity check, and everything like that. So because of that, we have a deadline of December 20th by midnight. If you open an account by then, Joe and Tiva, they're going to get that solo 401k open for you before December 31st. If you buy it after that, there's no guarantee, that plan will be open. There's potential, but it might not make it. And if you don't make it, that's okay. You can still contribute in 2021. And, I always have people that they skip the solo 401k plan because they make the deadline. What happens next year? They don't think about signing up until November or December the next year. This is something if you're planning ahead, the retirement savers I see kind of planning ahead, taking it month by month, just start going. Even if you miss the deadline, start a solo 401k and get it going. They're the ones that are successful and keep getting money in there. So if you miss that date, you can only contribute for 2021. So it's a little bit different than an IRA where you get to be a procrastinator all the way up until the last weeks of April. You have to make sure it's open. You have some time to do personal contributions in there, but you have to get everything done by December 31st as far as opening. So we have personal contributions and we have company contributions. This is another deadline here of December 31st. You have to have your salary, your profit share, your match. You have to have these things settled by December 31st. So Rocket Dollar provides a nice form. The annual contribution form for you. You can use that when you get your solo 401k. You can use that for your records. Just like an HR and CEO, you can't go back and change your payroll endlessly to give yourself a better match. This is something you have to kind of plan throughout the year. Talk to your CPA about it. In the early fall or right now, if you're in December here, get that settled. And make sure your salary is settled for the end of the year. And the actual contribution, as far as the money from your business, now that can wait till April 15th. If you need some time for your business to just get a little bit more cash to come in, you can wait until April 15th for that. However, you have to plan and decide what you're going to be doing for 2020 before December 31st. Okay. All right. Chris, you want to go into UBIT and UDFI?
Yep. So let's jump into this. This is a bit of an advanced topic, and we'll try to cover it. We'll try to cover it quickly for you. So there is a type of tax that is incurred when a retirement account invests in an operating business called unrelated business income tax. An unrelated business income tax, or UBIT, is triggered when you generate unrelated business taxable income. So if your retirement account was to go invest in, say, a retirement, or rather a rental property that then uses a loan, you would generate a type of unrelated business taxable income. We'll get into specifically what that is in a second. So you just need to know about these types of taxes. You don't need to be afraid of them, but you need to be aware of them. And so like if my retirement account went and invested in, say, the neighbor's lemonade stand. Now, legally, I can do that, but that neighbor is very likely going to pay taxes as a self-employed sole proprietor. So since the government's not going to collect all of the taxes, I would then have to pay, I would have to test to see whether or not I've triggered UBIT and UBTI. So there is another kind of unrelated business income tax that's called unrelated debt financed income. And I know this is a lot and it's a mouthful, but UDFI is a type of tax that is triggered when a retirement account invests using leverage, or the most common scenario here is with a non-recourse loan that you can use, or a non-recourse mortgage to buy a rental property with the retirement account. And so let's use a simple example. Let's say I'm going to buy a property for $100,000, and I'm going to use $50,000 from my retirement account, and I'm going to get a $50,000 non-recourse loan. And so now, in most scenarios, a $50,000 or 50% of my profits off of that investment are actually taxable, and they're not going to go back into the retirement account. But wait, if I'm using a solo 401k, I'm exempt from UDFI. If you're using an IRA, you're not. So it's just helpful to know what these things are and to know when you might trigger them. And if in the event that you do trigger unrelated business income tax or unrelated debt financed income, there is a separate tax return that the IRA will now have, that the solo 401k will now have to file. And that's called the 990T. Which is a complicated tax return. You want to make sure that you have a CPA that knows how to do that or has some experience with it. And so the most common occurrences of UDFI would be, in general, using a non-recourse mortgage. Remember, the solo K is exempt from it. If you're going to invest with an IRA, you will very likely have to pay this tax, and you want to have a CPA, again, that you can work with and make sure that you're on the up and up. Complex debt structures, or if you're investing in a real estate fund, one of the things that you want to ask the fund administrator or the fund manager is, do they know how to do accounting for UBIT and UDFI? And in the event that any UBIT or UDFI is triggered, it needs to get reported in your K1.
Okay. And yeah, this is one of those great benefits that Chris was just mentioning. A lot of people find, this a big headache, or real estate investors that are doing, you need financing for real estate. It's a very common strategy. The solo 401k has a UDFI exemption. So this leads to a ton of great benefits. Lending, if you're going out and getting financing for, real estate properties, that's the standard one, or different types of investments, this is less tax frustration for you, less calculation. And, if you're going into investment very quickly, and you're having to worry about the lending, you might need to pause, ask the investment provider about UBIT and UDFI, especially in an IRA. With a solo 401k, you can kind of go in and just dive into that investment right away. Maybe it makes more investments available to you with a greater return. Also higher returns in general. So, if there's a great investment through your self-directed IRA, and still go into it, just know that you could have to pay UBIT or UDFI. That's something you need to plan for at the outset of the investment. However, if you do it with a solo 401k and you do all of your investments that are getting hit with UDFI through a solo 401k, your returns can generally be higher over time because you're avoiding that tax completely. You don't have to worry about getting that tax written off through different methods. All right, so that was a complex topic. We're going to close it up here with a constant question. We're just going to go really in depth with our pricing. Again, on the right here, this is some of our competitors' pricing that we feel is just sometimes really excessive in the nickel and diming. Again, we try to do this Netflix style pricing, $360 one time ever to set up the plan, and $15 a month to maintain the plan each year for a core account. Then for a gold account, it's $600 one time, and then $30 to maintain the plan and maintain that gold service level. You can also get $50 off sign up. It's a benefit for everyone popping in on the recorded webinar here. Use Solo K 2020 to get that $50 off knocked at checkout. That will work with the core or the gold package. So a lot of people ask, what's the big difference between the core and the gold? I'm not sure which one I should go for. Generally, core is for do-it-yourselfers. They just want the plan. They want to get it up. They're totally fine doing extra work or getting everything done themselves. Gold is if, maybe you're used to advisor or CPA, just walking you through things, getting you through stuff, getting your accounts open, and also just that extra touch, some extra goodies thrown in here. So both our core and our gold account have the ability to enter any IRS investment. Both have what is called checkbook control. For our core account, the customer simply, if they really want that physical checkbook, remember, it doesn't matter if you actually have a physical checkbook, you can still go to any investment you want. The core customer just has to buy it themselves from our bank. I think the fee is like $30. For the gold account, the checkbook is included with the account. We will cover that fee for you. For both accounts, you're getting your plan essential here. You're getting a plan document, you're getting it created, and you're getting our preferred pricing relationship with our partner bank. I'll go into that in a little bit here. You're still getting rollover and contribution assistance with both plans. You're not out in the cold with core. If you want support, you simply need to email support@Rocketdawn, or you go through and schedule a call with our support team. Just go in there, schedule that call, and then they'll be able to meet you in just a few hours. Maybe it might be able to get to the afternoon or maybe the next morning. There are traditional and Roth accounts. So you're getting traditional and Roth in the core or the gold package. Now with the gold account, you're getting a dedicated support phone line. You can call support whenever you need or have an extra question, get that answered for you. And you're also getting your Form 5500 taken care of for you. Every single year, we'll help you just put stuff in our investment tracker, communicate through us with December and January. We'll make sure your Form 5500 gets filed. We give 4 bank wires a year. We comp those for our gold customers. Again, that's one of the few, if any, bank fees our customers are running into with any regularity. Some investment providers just prefer to send a wire. They're old school, they want it that way. So we will cover 4 wires for our gold customers, which typically is a fee of $25. Okay. And bank fees, again, something we've worked with our bank partners saying, hey, let's get these to be really fair bank fees and also work for a self-directed retirement account. So there's a $25 wire fee, which a core customer might have to pay, but a gold customer will cover that for them. There is a checkbook for $30 that the core customer will have to pay. The gold customers get that delivered to them. Again, you can do an ACH at no fee up to $100,000. And also a very big one, there's no minimum balance requirements. So if you need to move money out to a stocks and bonds broker or to an investment, that money needs to be an investment for months or even years. That's okay for that money to be out there. You just have to cover our fee for the $15 a month or the $30 a month, and you're getting that relationship with our partner bank. Okay, so thank you for sticking with us here. Maybe watching on YouTube, clicking through. Now, to sign up for a solo 401k at Rocket Dollar, you can sign up at online. Just click sign up in the top right-hand corner. You can click the link here if you're in a PDF or in another format. Go to app.rocketdollar.com/sign up. You'll go through, enter your information, enter some of your business information. Our support team will be in touch with a core within a few business days. With gold, typically 48 hours. We're reaching it out to you. We're getting your business information confirmed, and then that plan document will come. Then after that, we'll start getting bank accounts open, and we'll also start working with you on a retirement rollover. After the rollover gets dropped into your bank account, we'll give you a little bit of assistance, making sure you get into your actual investment. So again, sign up online. Then our support team will be in touch with you. And again, remember, the 20th is last deadline. If you sign up for that, there's a chance you might only be able to contribute for 2021. So thank you all for coming again today. And just a reminder, you can use the Solo K 2020 code to get those $50 off and sign up. Thank you, Chris. Thanks everyone for stopping by.